Here we go, our last adjusting entry. Here we have an example of services that we have completed. Okay, whenever we hear that term completed, that means earned. That means we need to record the revenue. Okay, so we need to record revenue. To increase revenue, we credit. So service revenue totaling $500 at the end of the period, August 31st. So far, we've completed $500, but we haven't had a chance yet to bill the customers. So because we haven't billed them, we haven't recorded it. Now's the time to record it. And accounts receivable to adjust for completed but unbilled work. Completed but unbilled work. Yay! And we can go back and double check against our guidelines. In that adjusting entry you just did, there was no cash, no equipment. We actually this time finally got to use a revenue account, and the offset was an asset. Okay, there it is one more time. So now you've done all 5 types of the adjusting journal entries that you will see in this chapter. Some for one for revenue. Well, there's 2 for revenue, 1 for unearned, 1 for billing. We had the one for expenses that we had not yet recorded. We had the one for customer prepayments. We had the one to record use of our equipment in the form of depreciation. And then the first one was the usage of an asset. Okay, you've done all 5 types. In the next video, I will show a summary of all of these 5 types, and I'll give you the notes in one place for that one. So definitely check out the next one, the summary of your adjusting entries. See you then.